Meanwhile, in Davos, obviously the guys talked to a bunch of players today. We heard from Scott Miner, they talked to David Rubenstein, and Ray Dalio on the risk of recession, maybe not this year, but possibly 2020.
There's a significant risk of a recession. You know, is it -1? Right. Is it +1? Okay, so let's not get technical about that too much. There's a high likelihood of a significant slowing in 2020.
That sort of dovetails with other survey work. PwC had a big one of corporate executives. Jim, I think 30% see global growth slowing in the next 12 months.
You know, I don't buy it. This was exactly the rap we had in about 2019, not that long ago. We heard that we were late cycle, that this was, there really was very little hope to the earnings. I would point to the fact that third quarter was shaded a lot. We came down, we made estimates go lower because we felt that things were going to be bad this year. Yes, we had mixed retail, but what we've seen so far from international is not that bad. I'm not buying it because, look, hedge funds come on. They're very rare that a hedge fund comes on and says, you know what, this is a really good opportunity. And yet I would argue that the bear market in December, you know, the stocks were down. The stocks went down 19.8%. And there's kind of opportunity. Now, we're up about 13% from the bottom. But I just think that I reject the notion that we can call 2020 with a mercurial president and the possibility of a trade deal. I just think that you can't make these predictions. I think that people want to make predictions. I don't know a hedge fund in the world that would ever say, you know what, it looks good for years. Because that seems like a Pollyanna position. But the market is up substantially since Trump was elected. And I just feel like a trade deal makes it so that everything that you say that's negative makes you feel, will blow up in your face.
So you seem a little more constructive to me, in a way.
Look, I've watched these bank earnings. I went through Bank of America's earnings this weekend again, just closer. J.P. Morgan's and Goldman Sachs. These were very good numbers. And I just think that some of the regional banks, the stocks are down a lot, and the numbers weren't that bad. I looked at...
No, although financials have been one of the best performing groups, if not the best performing group this year.
But that makes me feel better.
Right.
I like...
I mean, they have been responding.
Right,
you know, it's funny, not initially on the very first break, but not long after that, all these stocks rebounded, and obviously they've all been up sharply in the last few weeks.
Yeah, I mean, a lot of this is, they're making so much money. The revenues are huge. The expenses are all down. I find the expense control for these companies is magnificent. So I go back and I say, well, listen.
Comp ratios were
really
control.
good.
I mean, Morgan Stanley's numbers were surprisingly poor.
Yeah, you know, that was a letdown. Yeah. They did not do a good job. I thought that Goldman was good. I think that Goldman took off some of the franchise risk. But I just don't get I mean, yes, Dalio's really smart. I mean, one of the things that's really difficult is that the people who say that things are bad are all smart people. So you say, well, listen, you know, Cramer's going against Dalio. Dalio runs billions. Cramer's a TV, blah, blah, blah. No, I mean, I'm just saying you can't make these predictions. Yeah. That the predictions themselves should be held off. I mean, it's a little like saying, you know what? We know that the Pats are going to win the Super Bowl in 2020. Well, I don't even know if Brady's going to be playing. If he's playing, yes, I can make that judgment. I don't know if Trump's going to be playing. If he's playing, maybe. I mean, it is. I'm just saying it's just a bad call to make it 2020.